Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. This will be the last one of the week. It is Thursday, February 6th. We're going to take a look at Equifax. This is out of the industrial sector. This is a consulting company. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday. We take a look at a company stock that's pulled back on the day, run it through my screener, see how it stacks up, and see if it will make it onto my watch list. Just because it makes it onto my watch list does not mean I'm buying. It just means I'm interested in doing more of a deep dive into the financials of the company. There's the thanks button down below for anyone who'd like to buy me a cup of coffee. And a special thank you to the viewers and the subscribers of the channel. The channel continues to grow because of people like you, so I really do appreciate it. Now, this is the Vested Interest Stock Screener. This is how we will be running through the video. It's also how I look at a company on a high level to see if I am interested in doing more of a deep dive into the financials. I do add in price to book for financial companies like banks and insurance companies, using one for fair value. Don't blindly use one for fair value as a price to book reference if you're using companies outside the financial sector. Make sure you're comparing it to companies in the same sector and to itself over time. All right, now back to Equifax. You can find more out about them on their homepage at www.equifax.com. That's www.equifax.com. And you may be aware of this if you have, bought a car, bought a home, or taken out a personal loan, something along those lines. It's one of the three major companies that pulls your credit. You might have gotten your credit report from Equifax, or you may log on there from time to time and just to see what your credit is. But we help people live their financial best. As a trusted global leader in data analytics and technology, we deliver insights that power decisions to move people forward. So you can see they cover credit risk. So again, you pull your credit to see where it's at whenever you're making a purchase, such as a home loan, a car loan, something like that. They do personal verification. And these are a lot of things that they offer for businesses: identity and fraud, right? They're making sure that you are who you say you are. Data-driven marketing, so they might provide you some marketing services for your company. And workforce management, right? You can go on their homepage, see what products they offer. But again, they really are around, and what they're well known for is your credit line, your credit reporting, and whether that's business or personal. And they do offer some things around your credit, right? If you want to put some kind of system in place that monitors your credit, like a credit monitoring system, they'll do that and have automatic fraud alerts for you. Web scans, Equifax credit report lock, right? So they lock you in. Someone can't steal your identity. Identity restoration for whenever it happens that someone may steal your identity, and up to $1 million in identity theft insurance, right? So that's some of the other things that they offer outside of just credit reports. Now, the reason we are taking a look at them, down 8.42% on the day. Big drop on the day. We are talking about Equifax Inc., ticker EFX, again, out of the industrial sector. I was actually surprised they were out of the industrial sector and not the information technology sector, but that's where they fall. Close out the day at $247.49. 52-week range as low as $213.02, as high as $309.63. They are not quite within 15% of their 52-week low. They needed to drop to $245 or below, really $224.97 or below, but they are pretty close, just not quite there yet. They do have a market cap of $30.677 billion, currently a beta of 1.59, so they are more volatile than the overall market. A lot of times whenever you have companies with volatility like this, you can use it to your advantage, right? Wait for those big drops, buy in, and then hold whenever they run back up. Or wait for the right time whenever they run up and sell, if you're looking for swing trades, right? A lot of times they look at more volatility. Price to earnings ratios, PE is sitting at $54.88 per share. That's really high, but if a company is growing fast enough, a high PE isn't necessarily a bad thing, but that seems very, very elevated. And, a 30 PE is something you might see for like a Microsoft, a Google. I think Google is actually in the 20s, so this company would really have to be growing fast. Earnings per share, EPS at $4.51 per share. Earnings date is or was today, February 6th. So I'm assuming this 8.42% drop is because something around the earnings was off. Maybe their forward outlook was off. Maybe they missed on the top and bottom lines, or maybe one or the other. Who knows? You have to check that out. I have not looked at that. They do have a forward dividend of $1.56. I believe they're a quarterly payer. We'll see that towards the end of the video. Starting dividend yield of 0.58% currently. And we're going to look at dividend yield theory in a second and see if they're undervalued. Looks like their ex-dividend date is coming up. If you were to buy them now, you want to buy them on the 20th or before to be able to get in line for the next dividend, which looks like paid. Well, that's wrong. If their ex-dividend date is 12, it's not going to be back in December. So this is off. I'm not sure exactly. We'll see whenever they pay out their dividends, but this is off. I'm assuming if their ex-dividend date is February, they're either going to pay next month or the following. And a one-year target, at least according to Yahoo Finance, $304.01. So they don't see them quite getting back up to their 52-week high here, right, at 309.63, at least according to Yahoo Finance. Not affiliated with Yahoo Finance, just one of the sources I go to for information. Now, jumping over to the right, I like to look at dividend yield theory to see if they are potentially presenting any undervaluation. It's a quick check. It is not the end-all, be-all. But to do that, we look at their 5-year dividend yield average of 0.76%, compare it to their current 0.58%, or over here where it says forward annual dividend, 0.58%. Since their current dividend is lower than their 5-year average, that actually speaks to overvaluation, at least according to dividend yield theory. They do have a low payout ratio, 34.67%. Let's drop down to free cash flow. I want growing free cash flow over time. Typically, if a company has growing free cash flow, they can do a few things. They can buy back shares. They can make acquisitions, reinvest back in the company. They can pay out a dividend. Obviously, this company does. And they can raise that dividend over time. They can also pay down debt. We want a company to be doing all those, so we want growing free cash flow. So going back here to December 2021, you can see $865 million in free cash flow. December 2022 looks like they dropped down to $132 million. 2023 back up to $515 million in the trailing 12 months, which now would include all of 2024, $783 million there. So actually, since 2022, they've been growing free cash flow, but they did have the one down year from 2021 to 2022. They did repurchase some shares way back here in 2021, but nothing here over the last few years. Now, jumping over to stockanalysis.com, this is another source I go to for information. Again, not affiliated with stockanalysis.com, just another source I go to. And you pick any sources that you want. I just recommend more than one source so you can make sure the information you are getting is accurate and up to date. Now, 16 analysts have taken a look at this. They call it a consensus buy. If you were to go to stockanalysis.com, you could click on how many might call it a strong buy, how many might call it a buy, a hold, a sell, and a strong sell. Whenever I clicked on it, I believe it was 8 called it a strong buy, 7 called it a buy, and the rest called it a hold. No one called it a sell or a strong sell. Those were where it was at. So take that with a grain of salt, right? They do have a low estimate of $283. It's currently lower than their lowest estimate. If it came back up, that would represent a 14.35% increase from where it currently sits. Average estimate of $312.63. That's higher than what we saw with Yahoo Finance on the previous page, and that would represent a 26.32% increase. And if they happen to hit their high of $380, that would represent a 53.54% increase. All the while, you could collect that, 0.5% dividend yield. Statistics. I like to look at the statistics. Look at return on equity and return on invested capital to see how well the company is reinvesting its money back into itself. Return on equity is sitting at 12.64%. I like 10% or better, so that's good. Return on invested capital, again, I like 10% or better, only at 6.36, so a little lower than I'd like it. Their EPS growth, earnings per share growth, I like 5% or better forecasted over the next 5 years. They're up at 32.88%, smoking high. And revenue growth forecasted at 11.84%, double digits. I like to see that too, though it is not part of my initial screener, but I do add it in here. All right, let's look at the dividend history before we get back to the screener and see how this one shakes out. Quarterly payout ratio, again, low at 34.66. I like under 75%. Dividend growth, not applicable. They are not growing the dividend. We'll see that here in a second. Buyback yield is negative. We'd like to see them, when they are buying back shares, do it at more opportune times. And shareholder yield is negative. We want that to be positive also. Now, they do pay out in the March, June, September, December timeframe, like most companies do. But as you can see here, going back to May 2022, and I did go back even a little bit further than this, it's been a while since they raised the dividend. May 2022, they had it at 39 cents, and that's where it remains today. So unless they raise the dividend sometime here in 2025, they have not raised the dividend in I think it was more than that, 5, 6, almost 7 years since they've raised the dividend. All right, let's wrap this one up and jump back into the screener here, see how this one stacks up. Understand the business. That's where we start, right? It's, again, they're a credit agency. They're pulling your credit whenever you're trying to get or not a credit agency, but they're pulling your credit and monitoring your credit for some fraud alerts, some other things for businesses as well. But they're well known for their credit reporting, right? There's three major companies that do that. They're one of them. Growing free cash flow over the last 3 years, not the last four, so almost there. Growing dividend, no. It's been stagnant for quite a while. The payout ratio is under 75%, so we'll get a check there. Dividend yield theory says they're actually potentially overvalued right now. Buy below current cost basis are within 15% of a 52-week low. Not quite there yet. They need to drop down a little bit more. Return on invested capital, return on equity over 10%. Return on equity was over 10%. Return on invested capital was under, so no check there. But their earnings per share growth was way over 5%, over 30%. So check there. They get 3 out of the 8. Not quite going to make it on my watch list. Is an interesting company. I was not aware that they paid a dividend, but it was worth taking a look. Let me know what you think in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Don't forget to ring that notification bell so you're notified whenever I put out any new videos. And let me know what you think of Equifax. Is it one in your portfolio? Maybe it's one you were selling today. Maybe you were part of that down push on the overall price there. Or is it one you're watching for more of a pullback? Would love to hear from you in the comment section down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.